I'm Justin Warden, the marketing coordinator here, and I'm here with Patricia Kraus, who is the economist designated specifically for Latin American markets for COFAS. She's located in Sao Paulo, Brazil, and has firsthand knowledge and insight into many Latin American economies. Before Patricia begins her presentation, I just want to get a few housekeeping items out of the way. If anyone has any questions during the presentation, you can type them into your questions function on your side toolbar, and we will take all those questions at the end of the presentation and do a brief Q&A with Patricia. Also, if you could, we have a very short survey that you fill out upon exiting the webinar. It takes really about 15 seconds to fill out, but it gives us a lot of great insight into how we can continue improving our webinars for all of you. And with that, I'm going to pass it over to Patricia and let her begin the presentation. Patricia, we still have you on the line?
Yes.
You're ready to start.
Okay, thank you. Hello, everyone. Good afternoon. First, we want to thank Credit to Be for inviting COFASI once again to talk about Latin America. Yes, this time, as we did in the previous one, we will start with an overview of the region. Then we will follow by an analysis of the current economic scenario in the two major economies of the region in terms of GDP, namely Brazil and Mexico. Okay. So COFASI produces its own rating for country risk as well as business climate. There are 7 grades, as you can visualize in this row here, A1, A2, A3, A4, B, C, and D, being A1 the best one, and D represent an off-cover country. From A1 to A4 are considered investment grade countries, and from B to D are the non-investment grades. Country risk rating considers countries' macroeconomics fundamentals, while business climate mostly considers items such as legal system, time to open or close a company, how to get electricity, credit, and so on. COFASI produces rating for 157 countries, and these assessments are reviewed on a quarterly basis. In this link there you can find the rating as well as a macroeconomic overview that we also review on a quarterly basis, and you can also have access to all studies that we publish in country risk panoramas, sectors panoramas, or insolvency ones. Okay.
So now before Patricia goes on to the next slide, what we're going to do is just put up a brief polling question that everyone can answer. So the polling question's up on the screen now. All you have to do is click the answer that pertains to you. So the question is, how familiar are you with the Latin American economy in general? The choices are no knowledge, limited knowledge, average knowledge, and advanced knowledge. So we're going to leave this up for just a few seconds and let everyone who's in the webinar vote. All right, it looks like we have the vast majority of people have already answered, so if anyone wants to answer in the next couple seconds, I'll leave it open. And with that, I'm going to close the poll and share the results. So we have 7% responding with no knowledge of the Latin American economy, 43% with a limited knowledge, 41% with an average knowledge, and 9% with an advanced knowledge.
Okay, nice. So what we're going to show, our overview on LATAM, is that considering the activity, it has been losing momentum. Yes, COFASI forecasts a growth of 1.1% this year. This movement can be explained by weaker world activity, and mainly the lower growth in China. We forecast a growth of 7% for this year. Latin America is a major producer of commodities, and for many years we have grown significantly based on these high exports to China and higher prices, international quotation. But this period has passed. We are not going to verify the same prices anymore. At the same time, they did not took advantage of this time to make the necessary reforms, such as improving infrastructure in the region. So right now we have an industry that has been dismantling. We are not competitive in terms of manufacturing products. So here when we take a look on this infrastructure quality chart, here we have 145 countries, and in this rank, Chile is the best positioned country, ranks at position 49, and all others are below the average. So it's really needs to improve. Another important point this year is the recent drop in oil prices. Uh, Certainly, sure, Venezuela is the main impacted country, yes, but in the lower instance, Colombia, Ecuador will also be impacted. We also reviewed them GDP growth forecasts. And if these lower prices persist for a longer term, we also expect countries like Argentina, Brazil, and Mexico to be impacted. Why? Because all these countries, they have important projects to increase oil fields. Like in Argentina, if the shale gas in the Vaca Muerta field, Brazil with the pre-salt, we still need to make very strong investment, and our deep water oil fields, so strong investment in a context of lower prices, and in Mexico, that they also, with the energy reform that was approved in end of December 2013. Okay, so here we can see our forecast for the main countries in Latam. So in Mexico, of course, we're going to speak more later, but we expect growth to increase this year. We work with forecast of 3.1 increase. In Colombia, that has been growing above the average of the region. Growth should reduce rhythm this year due to the lower oil prices. Yes, inflation is also increasing there, so government so central bank cannot reduce interest rates to boost activity. At the same time, 3.8 is still high when we consider the region's growth rates. Yes, in Chile, yes, last year was not a good year due to the lower copper prices and also because of the tax reforms that the president did that reduces confidence, mainly the industry confidence. So this year we expect to recover the confidence. The first index already shows that that's improving, that's recovering, and also because of investment in copper that's getting mature. Peru, the case is not very different. We also mentioned the copper price. We can also mention copper. This is why we've observed a high decrease last year, but we expect to get rhythm again this year with 4.2. Not the same rhythm as before, but better than the previous year. In Argentina, the scenario is really bad. We have presidential election this year, so we do not expect big changes in policy, economic policy this year. We have the holdout issue that is still going on. We don't expect government to get any agreement until the end of this government. We have a high inflation, import barriers over import due to the lack of international reserves. So all this has been impacting the economy, consumption, and we expect GDP to decrease by 1% this year. In terms of Brazil, we are also going to speak better later, but we expect the economy to contract by 0.5%. So here we present the country risk and business climate assessment of COFACE. Generally, all the major economies in Latin America are A4, classified as A4. Outliers are, the positive outlier here is Chile with A2 in terms of country risk as well as business climate, and Argentina with a C due to deteriorating scenario in the economy. It's also worth noting that Brazil was considered A3 in terms of country risk until March of 2014, but due to the deterioration of the macroeconomic fundamentals, we downgraded last year. So here we see the Global Competitiveness Index from IMF. So before talking about Brazil and Mexico, I think it would be important to see how it is the competitiveness in those two countries, and also comparing both of them relatively. So Brazil ranks in position 57 and Mexico is position 61. So we can notice that both are badly positioned in terms of institutions, infrastructure, health and primary education, labor market efficiency, good market efficiency. So this is really bad if we consider foreign investments. Yes, it's not easy countries to get inside, to deal. It's costly too. But what we need to emphasize here is that they are only really well positioned in terms of market size. So Brazil is still really is a high market as well as Mexico. So even in a bad context in terms of GDP growth and all the business climate for Brazil, you still have opportunities to grow. So Brazil is considered position 9 and Mexico position 10. So what's going on in Brazil right now? So Brazil has been facing a stagflation scenario. 2015 we expect to be a year of adjustments in the economy. Why a stagflation scenario? We don't have the 2014 GDP figure yet, but we expect it to break even, and inflation now stands at 7.7%. The last available data, that's the annual data until February 2015. Right now, basically, the administrative prices are the one who are pressuring inflation up, because government has used this tool to keep inflation more or less under control during many years. So now we have been verifying energy tariff increases, and also oil prices too, even in a context of lower prices, broad prices, yes. So just a reference, our target inflation here is of 4.5% with a standard deviation of 2 percentage points. So we are still higher than our top ceiling, yes. And in this context, interest rate, which is already known as very high in Brazil, that's currently at 12.75%, should continue to increase in order to try to contain inflation. So another point that is the external environment, as I mentioned, the lower commodity prices and lower growth in China. Brazil is the main producer of soya and of iron ore, and both prices are decreasing. Prices of iron ore reduced 50%, roughly 50% in 1 year. And also the Argentina import barriers. Argentina is our third main trade partners, and they have been increasing barriers of imports due to the international reserve shortage. So we do not expect this scenario to change in the short term. Finally, we also have a scenario of water and energy rationing risk. We have been facing droughts in the last years, and our energy matrix is based on hydroelectrics, so we are basically twice when we have droughts. So if this happens, the industry will be the main affected segment. Here we observe the behavior of the industrial production. Production contracted by 3.2% last year. We expect this year to be another bad year for the industry. When we look for the data in the industrial production, we observe that the one who declined the most was the capital goods, which declined 10.9%. Is really bad, also because this represents investments. So for a country who have a weak infrastructure, to see this figure is really bad. Another important point here is durable goods, which reduced almost 10%, associated with the best performance of our automobile industry last year after years of strong growth. Yes. So another important point which helps to explain the best performance of the industry are our investment rate. Yes, in Brazil it's really low. The highest point was achieved in 2010 when it was of 19.4% in terms of investment per GDP. Now stand at 17.7%. This is the last available data, and we analyzed the data of the third quarter of 2014. And it's not only low when compared with China, which invests 48%, but it's also low when we compare with our neighbors in Latin America. So Brazil is only better positioned than Argentina, yes, when we consider the investment rate of 2013. So do we expect industry to recover in the short term? No. Why not? When we look to our Industry Confidence Index, the last available data of February 2015 shows that we are really well below our 5-year historical average. Our 5-year historical average of 102.2 points, and we now stand of 83 points. So we are really not. Entrepreneurs are really pessimistic about the current scenario, and they do not expect the economy to improve in the short term. That's why they are not investing in and this index shows us that they do not think to increase investment in the short term. So as I mentioned, if we have a scenario of rationing, the industry will be the main impacted one. But even when we break down the industry, we see that some segments would be mostly affected. Hello? Some sectors would be most affected. They are steel, capital goods, appliance and apparel due to its intensive usage of energy. Looking for our trade balance, it has also deteriorated in the recent years. It's associated with the lack of competitiveness of local products, mainly manufacturing products, as I mentioned before, the import barriers in Argentina, and the lower commodity prices. So we expect now, the first 2 months, we verified a trade deficit of $6 billion. We expect to recover somewhat, but in a moderate rhythm. Yes, it's good to analyze together with the exchange rate, which has been depreciating in recent years. Actually, we expect real to end this year in 2.95% to US dollar. Currently, it's higher. It's in 3.12, around 3.12. And this is important to mention because for many years the entrepreneurs have said that the fault of the industry performance or the trade balance was associated with exchange rate that was really appreciated. But what we have been seeing is that exchange rate has been depreciating and trade balance has not been rebounding as well as industry neither. Yes. So talking about Mexico, we expect GDP to grow at a higher rhythm in 2015, basically on the background of higher growth in the U.S. U.S. is the main destiny of Mexican exports, represent around 80% of the manufacturing exports. Consumption that remains sluggish should also improve due to a stronger labor market, which helps to increase agreement. Many multinational companies have installed factories there because it's easier to produce there and to export to the U.S. So they usually perform, the manufacturing goods are good, performs well. And construction that has suffered a lot until the mid of 2014 has have shown a solid growth in recent periods. But on the other hand, with oil prices recent free falls, it reduces the attractiveness of the oil reform. Government has already working to improve this. What they have does in recent period is that they decided to make the first bid on shallow water oil fields. So the big multinationals of oil have already shown interest on this process. So what we expect, not that they're not going to get profits from the energy reform. So, but they will need to reduce the number of fields to be bid, because some of them should not be attractive, at least in this context of lower prices, the deep one or the shale gas. So finance minister also announced spender cuts of around 8.3 billion US dollars, or 0.7% of GDP, because of the lower oil prices. Oil revenues represent 1/3 of government, that we do not expect big problems this year in terms of government budget, also because they make hedges of them oil export revenues. So this year they have had for 57% of the production. So we don't see big risk in the short term. The biggest issue right now for the president is his popularity is going down due to corruption scandal and traffic violence cartels in the country. So as I mentioned before, construction and manufacturing has been outperforming general industry. Here it's easy to observe how construction has improved in recent years. 2013 was a year to forget for this industry, but after mid-2014, since May 2014, it started to improve significantly, and manufacturing is a good performance among the years. So this year we expect construction to increase by 1.9%, and here we also manufacture 3.7%. So sorry. Now this manufacturing improves 3.7% in 2015, and construction 1.9% against a drop of 4.8% in 2013. So our forecast for this year, inflation ended 2014 in 4.1, but has started to drop significantly in the first month due to lower energy, lower telecom tariffs, and also because of the effect of the tax hikes promoted in the beginning of last year that now is off of the base. Yes. Interest rates should increase in the middle of the year due to, as we expect, Fed to increase interest rates in the U.S. So Mexican economy should follow the U.S. Decision. Trade balance should deteriorate this year due to lower oil prices. At the same time, we expect exchange rates to appreciate. Now it has been depreciating, but this movement should revert in the short term due to oil revenues that we expect to inflow to the country.
All right, so we have a bunch of questions coming in now. If anyone does have any more questions, you can feel free to put those into the questions function, and we'll get to all of them before we're done. The first question is, do you expect interest rates in Mexico to increase much greater than U.S. rates?
Sorry, that we expect Mexican interest rates to increase higher than the U.S.?
Yes.
Yes, because generally those countries in Latin America they have a higher risk, so them rates are always higher than the U.S., which considered free of risk. That's why we expect a high increase in interest.
All right, great. Just so that before we get to more questions, I just want everyone to know that we will be sending out a copy of the presentation to everyone, and we have also recorded the webinar, so that'll be available on our website. Another question that we have is, what concerns may make the Mexican economy get worse throughout the rest of the year?
The big concern would be if retail does not get rhythm as was expected. The energy reform seems to be well addressed, but we still need to see how it will work. On July 15th will be the first, they will announce the first winners of the bids, so we need to see who won, and also how it works. So actually now since everything's fine, but we need to follow because it's not something simple. Yes, can have some delays. So this year I don't see big risks because, as I mentioned before, they also hold hedges. But next year's we need to see how this energy reform will continue, and also the violence issue is also something important and not easy to be solved.
All right, great. The next question we have is, how do you anticipate recovery in the Latin American nations affected by oil? And they specifically asked about Colombia.
Yeah, Colombia, we expect to grow at a lower rhythm because of oil prices, but they still have many opportunities to grow there. Construction is performing well, yes. Retail is also doing well. So they are not only an oil company, no, I'm sorry, an oil country. Yeah, they also hold other resources. From now on, they will need to deal with lower prices. They don't have other options. They need to be to control them fiscal expenses.
All right, great. You've already touched a little bit on Colombia. Someone asked if you could also comment a little bit further on Argentina.
Yeah, from Argentina, with many things going on. As I mentioned, the presidential elections in October. We still don't know who government will support. Yes, but we think that opposition should gain popularity. Also because of this murder of this promoter there that also has increased people against the government, and we don't see business climate to improving in the short term. Yes, because of these barriers that will still continue, import barriers, and also the high inflation in the country.
All right. Another question is, could you please clarify if you believe the construction industry will increase in Mexico throughout the rest of the year?
Yeah, we think that the perspectives are positive, also associated with the beginning of the energy reform.
All right. What are your thoughts on Mexico versus Peru in regards to their economies?
Opinion about Mexico and Peru?
Mm-hmm.
Yes. Okay. Now, Mexico, I think they are this energy reform, and they are adjusting in the right way as prices are going down, and do not expect to change in the short term. They decided to bid only the shallow water fields, and also they reduced expenses, showing commitment with fiscal result. this is positive. They are not increasing them indebtedness, not trying to boost activity, increasing debt. But at the same time, they have social problems. They are really big, and government presidents usually do not see big. They are not really worried about this, at least what they have been showing, like the scandal that happened last year with the teachers that disappeared. Yes, and were probably murdered. So they have big challenge in the near future. Peru, it was a really poor country, so they have been acting in the right way. So I expect them to continue doing the right thing. They have been opening economy for trying to free trade and so on. So this is positive. Turning the labor law, improving this labor law. Yes, and what also impacted in Peru last year, it was that they were combating mining um, that was not allowed by the government and so on. So this is positive, and we expect to go to the right way.
All right, great. Furthermore, from Mexico's perspective, do you believe that energy reform could be impacted based on the results of the midterm election in fiscal year 2015?
I don't think this would be decisive to the energy reform. I think they are doing the right thing. They already was already approved in Congress, the laws and so on. I don't think this will impact significantly.
Okay. Let's see what else we have here. Why is the rating in Brazil and Mexico the same, as they seem to be going in opposite directions?
Sorry? Why are the
COFAS rating for Mexico and Brazil the same?
Yeah, we think that they are both are emerging economies, more or less the same size. Both improved in recent years, but have important issues to still to improve. So it's not that they are the same kind of economies, but in some way they are still they are at the same level. Yes, Brazil was better in terms of macroeconomic fundamentals in the past, late past, but now has deteriorated in recent year. They have shown some fiscal lack of commitment, and now they are on the same level.
Okay. Let's see. Is it possible that Brazil's struggles might lead to any level of reform in the bureaucratic obstacles to importing?
No, Brazil not barriers to import as Argentina and Venezuela and so on, but we expect governments already increase taxes over imports. Did a small increase in tax. So I don't think they will do more than this. I don't expect governments to really put a big barrier over imports.
All right. It says we'll have some protests against the government scheduled for the next weekend in Brazil and a little bit into the future. Do you believe that the scenarios will become worse?
Yes, I think it's deteriorating and it will continue to deteriorate. But at the same time, this protest was first because of an impeachment of the president. This I don't think is going to happen. They do not have really a reason to, an argument to do it, yes. But she won with a small margin, yes, only 51%. Yeah, so it was really difficult, and now, as I mentioned, she was spending a lot, so she needed to make adjustments. This is not something popular, and she didn't mention in her campaign that she was going to do it. Yeah, so now the ones who vote against her already the same opinion, and the ones who vote, and some of the people who vote for Dilma now don't like what the measures that she did after she took office of the second mandate.
All right. Let's see. We have another question on here. Do you see the U.S. dollar currency restrictions out of Argentina?
Sorry, what? I see the U.S. dollars in...
Yeah, do you see U.S. currency restrictions out of Argentina?
Yes, they are facing lack of U.S. Of international reserves. Yes, I don't think that this will change in the short term. Yes, and they continue to keep in a rate of around 8, the official one. Yeah, 8 pesos per dollar. I would think they would do this also because if they let the peso devaluate very strong, they will also pressure inflation very high, which is already close to 34%.
Okay. We also have a question on Venezuela. What do you think are their chances to rebound in 2015, and do you think there are specific segments that may be stronger compared to others?
No, I don't see any chance of a rebound in this year, and for the near future, situation there is really sensitive. The government has increased the role in the economy. It's something really serious, the way they're going. And actually, Venezuela for us is an off-cover country for already a long time because sometimes they can have a company there that the client can trust, but the point is that the government does not allow them to send them the resources outside to pay. Yes, they have them what they call the CADIV, who do not pay the amount in dollars. So this is a big risk, and this affects all industries there.
Okay. We also have another general question on what are your thoughts for Uruguay for this year?
For Uruguay, it's going well. We're having good growth rates, yes, but sometimes they need to control inflation, yeah. But this small country, not so representative for us in terms of trade, but performing well. The recent drop in oil prices was expected to be something positive for them, but at the same time they control the prices of oil, so not a big impact at the end of the day.
Okay. We also have another question that China recently announced a 10-year, $250 billion Latin American investment program. Do you think that program will have any significant impact on Latin American economies?
And some of them, yes, they have been dealing a lot with Argentina, with Ecuador. So it's really important for those countries that are suffering. They are very sensitive right now. Argentina with all the issues I already mentioned, and Ecuador because of the oil revenues. Yeah, so I think it's a good deal for both sides.
All right. Let's see what else. We have a question. What does the slowdown in energy reform in Mexico mean for Pemex?
Yeah, it's not positive for Pemex. Pemex figures are really bad. They need to improve technology after many years, 76 years closed. So it's not positive, but at the same time, we're still going to have investments in energy reform there. So it will reduce the value invested, but still going to have improvements.
All right, great. It looks like that's all the questions we have. So with that, I think I'd like to wrap this presentation up. I'd like to thank Patricia and Kofas for taking time out of their day to present to us today. And I'd also like to thank all of you for taking time out to listen to our webinar. As I said, if you guys would be willing to fill out the survey at the end once you leave, we get a lot of great information out of that on how to continue making these webinars better for you. So with that, we're going to shut it down, and thank you, Patricia, and I hope everyone has a great rest of your day.
Thank you very much. Good afternoon.